Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a weak start after equities on Wall Street fell to a 3-week low on growth concerns. The Organization for Economic Cooperation and Development cut its growth forecast globally for this current year, adding that more cuts may lie ahead due to trade tensions and the Brexit. Staying with growth forecasts for India, Nomura expects GDP growth to come in at below 7% in FY20 because of the global slowdown and also political uncertainty in the election year. And the Income Tax Department will increase its scrutiny on 87,000 individuals after they failed to respond to notices sent after depositing large sums during demonetization. Let's talk about the US markets now. US stocks fell for a third consecutive session on Wednesday, closing at their lowest level in 3 weeks as investors continued to seek clarity on the likely trade deal between the US and China. Meanwhile, the trade deficit coming in at a decade high also weighed on investor sentiment. Abigail Doolittle wraps up all the action on Wall Street in this report.
Stocks sold off in Wednesday's Wall Street session. In fact, for both the S&P 500 and the Nasdaq, it was the worst day in about a month. At the end of the day, the Dow finished down about 0.5%. The S&P 500 was down 0.6%, and the tech-heavy Nasdaq down about 0.9%. For the S&P 500, down 6 out of the last 7 sessions, and the last 7 sessions are the worst 7 days of 2019. So the big rally that we've had this year is stalling a bit. This on a confluence of technical factors, investors looking for more certainty around macro events, plus the earnings view, the corporate profit outlook. There have been revisions for decelerating growth. Investors want more information on that. So right now, a bit of a stalemate, but to the downside on Wednesday. Now, with that decline for the S&P 500, not surprisingly, 9 out of the 11 sectors were lower. In fact, both energy and healthcare down more than 1%. Materials and utilities, 2 of the more safe haven or defensive sectors, at least utilities, up just fractionally. So bearish composition there. And one of the standout decliners on the day, GE, down 7.9%, down for a second day in a row, down more than 10% over those 2 days. Investors are displeased with CEO Larry Culp's turnaround plan, the fact that it's going to take longer and that cash flow will be negative for the industrial sector. The chips were weak too, down 1.7% overall, led by Micron, AMD, and Western Digital. All of those shares down 4.6% or more. That's important to note because the stocks, the chip sector, considered to be a leading sector, those components used in everything used today. So if there is weakness for the chip sector, it typically portends something for the broader stock indexes, something to keep an eye on. And speaking of also something to keep an eye on, the haven assets were higher on the day. Both bonds and the yen pulled to the upside just a little bit. But when you put that together with the worst day for the S&P 500 and the Nasdaq in a month, Wednesday's Wall Street session was risk off. In New York, Abigail Doolittle, Bloomberg News.
All right, early indications pointing to a flat start for the Indian equities, but in Asia this morning, it looks like early signs at least point to a weak session today as well. We're joined live by Rosalind Chin from the Hong Kong studio to tell us all the details of what's happening this morning. Good morning, Rosalind. Looking like another weak start today.
It does, and in fact, we do have Japanese stocks looking like they're heading for their third close in the red today so far this week. Now, let's take a look more broadly at first. So we're taking a look at the MSCI Asia Pacific Index that's losing about 0.25%. Now, Wall Street, of course, didn't give a lot of joy to investors over here in this region, not giving a lot of reasons to buy. We do see some concerns growing over the U.S. economy. We did have the Beige Book, the Fed's Beige Book, which downgraded its outlook of the U.S. economy and downgraded its view largely based on January and February, when, of course, the U.S. economy was hit by that government shutdown. Also, we had the trade deficit numbers coming out showing that last year it widened to a 10-year high. So not a lot of help there from U.S. and overnight from Wall Street. Now, in Japan, we do see some of their stocks there taking a bit of a hit. We have got Mizuho Financial down by 1.6%. It had been down more than 2% at one point, slashing its full-year forecast due to a $6.1 billion restructuring charge. And also, Renesas Electronics. Now, that is down by 14.6%. It had fallen by its it plummeted by its daily trading limit, in fact. And that is after Bloomberg sources has been saying that plans to halt production at 6 plants that make chips for cars and industrial machinery in Japan due to slowing Chinese demand. And also that stoppage could last for as long as 2 months, and it could also stop temporarily for a few weeks output at some of its overseas plants as well. So that hitting Renesas Electronics there in Japan as well. Now over here in Hong Kong, the Hang Seng is losing by about 0.27%. Shanghai Composite also down by almost around the same amount, and CSI 300 index down by by more than 2/3 of 1% at this moment in time. However, we have been saying though on Bloomberg that Shanghai Composite at least looks a little bit overbought at the moment. So the question is, are these markets taking a little bit of a breather, or is this the turning point for something? That is what I think a lot of investors are trying to work out. Quick look at Australia, where the S&P ASX 200 is making gains of 0.16% at this point in time. A little bit more to look forward to today. There's an ECB decision coming up, of course, and of course the US jobs and market report coming up on Friday. Back to you.
Absolutely. Thanks so much for that, Rosalind. Well, we spoke about the US markets, and there's a Bloomberg report that suggests that President Donald Trump is very carefully watching the markets. In fact, he has now pushed his team of negotiators to close a trade deal with China in the hope of sparking a stock market rally ahead of his re-election campaign. Bloomberg's Joe Sobzik explains why a trade deal is important for the president's future in this report.
A lot of it is that the president is very driven by what the stock market is doing day to day. He uses the stock market in his rallies to brag about how much people have invested in, or how much people have gained in their 401ks since he's been in office. So this is a very important marker for him. And the question is whether or not the zeal to get something done will maybe lessen some of the demands that the U.S. is making on China. He's been told by his advisors that getting a deal would unleash a big rally in the stock market. It's unclear whether that would be the case because some analysts say that it's already been priced in. But nonetheless, that has made him very eager to get it wrapped up and to get to some sort of signing summit with President Xi of China, which he has been hoping to do sometime in the next month.
Now, we told you that this is one of the worst weeks for US stocks in the recent past. One of the factors that contributed to the negative sentiment on Wall Street was the country's trade deficit. It came in at the highest level in a decade. The deficit widened in large part on account of a rise in imports and a reduction in the exports of soybean and other products, a result of recent US trade policies. Bloomberg's Derek Wallbank brings us more in this report.
Well, look, the U.S. trade deficit hit a 10-year record today. It is much larger than the president wants it to be. It is also, look, as you said, the key metric that he looks at to judge how U.S. trade policies are working around the world. Now, it's important to note here that the trade deficit is not just a result of what President Trump does or doesn't do. A large part of it is currency related. It's related to how well your economy is doing, an insatiable U.S. demand for cheap goods and imports. So there's a lot more to it than President Trump's trade policies. But look, this is a president who watches this number closely, and frankly, I think he's undeterred by it so far. I mean, this isn't necessarily prompting a revision of strategy. This is a president who just recently said that they're going to pull preferential trade status from India because they thought that India wasn't opening its markets well enough. So look for more from this president in his trade strategy, not less.
Well, meanwhile, the Indian government is looking at various options to counter the US on the latest update with regard to trade. But we'll talk about that a little later. Agam Vakil is here to tell you all about the trade setup for the day and also what's happening in the futures and options space. Morning, Agam. As of now, completely flat is the indication, right?
Yes. So, well, after the kind of trend that we've seen, some amount of consolidation is expected, and which is why the SGX Nifty at this point in time is absolutely flat, as Alex has suggested. But the good news is we're above 11,000 on the Nifty. But that said, we have seen gains in the mid-cap and the small-cap indices, as we have in case of the banking indices, which includes the PSU banking index up by as much as 0.5%. American depository receipts Well, ICICI Bank, Dr. Reddy's, Vedanta, and HDFC Bank advance in trade. And we also have some declines in Wipro, Tata Motors, and Infosys. But coming down to your institutional flows, FIIs continue to plow in money, but DIs this time withdrew 878 odd crores on a net basis. Moving on to your contributors, we have Reliance Industries, ICICI Bank, HDFC, and ITC providing the bulk of the gains. And on the losing end, we do have some pressure from something like an Axis Bank, HUL, and Tata Motors. But moving into trade, what about futures and options? Well, fresh longs continue to come through in the March series with about another 5% at an OI there. Bank Nifty futures also continuing to see fresh longs. And in terms of your other variables, now at this point in time, at least as far as the top end is concerned, we're starting to see some more resistance building around the 10,500 mark. That is where you're seeing considerable increase in open interest, and that, I reckon, will determine the range within which you can expect the Nifty to move within. The other positive here is that we are also seeing significant open interest, in fact, maximum open interest in the 11,000 put out here, and that will be crucial. This now becomes a very crucial support area, which is why we're keeping an eye on that 500-point range. The range clearly has shifted upwards. But moving on to trade yesterday, as one was expecting, writing around the 11,000 mark, that is the 11,000 put. But your WIX, of course, it's come off quite substantially from the levels of around 20. So now it's currently at around 15.6. And the put call ratio, relatively high at around 1.8. It's certainly in the overbought zone. But the Nifty banking put call ratio surprisingly fell to around 1.5. In terms of stocks, we now have one more entrant in the F&O band, that is IDBI Bank, which joins Reliance Power and Wockhardt very early on in the March series. So we'll keep an eye on those. In terms of other stocks, we're watching out for Wipro, ICICI Prudential, and Amara Raja Batteries, all looking at fresh longs along with Jubilant Foodworks. And in terms of unwinding, the usual suspects, I reckon, Saramco Cement, Just Dial, among others, which is seeing some sort of short covering. So on the whole, it's certainly turned out to be a great 3 sessions, Alex. But the question really is, are we expecting some sideways movement, some consolidation after the kind of gains that we've seen?
Absolutely. Thanks so much, Agam, for that. But, in all of this conversation about trade wars and a slowdown in growth, there are some that believe that the trade war between the US and China will benefit domestic-oriented emerging markets, including India. In fact, one of them is Devan Kalu of Aberdeen. Speaking to Bloomberg Television earlier in the day, Kalu said that India's trade issues with the US are negligible and most of the risks related to the elections are priced in. Listen in.
We think that the Asia market, which is one of the poorer performing markets last year, should be a beneficiary. So the creation of domestic, or the recreation of domestic liquidity, plus the focus on domestic stimulus, means that some of these more domestic orientated Asia companies look quite attractive, certainly given the pullback that we saw last year. But with that, I would say that there are other areas in emerging markets that look quite interesting. So Brazil would be one country I would highlight. And indeed, I would also still look at India.
I want to draw your attention to India and get your more specific thoughts on that, given that we are starting to see the US, or President Trump, I should say specifically, turning his eye when it comes to the trade relationship with India now. I want to throw up this chart looking at the extraordinary demographic growth and story that is India. Average real GDP growth of about 7% over the past half decade. We've seen stocks recently perform pretty well in this part of the world. Charity mentioned that there's the political risk, given that it is an election year, but is the geopolitical risk in terms of that relationship with the US, a trading relationship, is that something that's crucial, that's going to be the next, I guess, hurdle for investors to have to get over?
Well, specifically with regard to India, no, although one can never be too complacent. But one of the concerns that people would have is that if there is a trade war or trade issues between the US and India have a knock-on impact into economic growth. But actually, the trade issue is a smaller one with regard to India because it's more insular or more domestic-orientated economy. Quite rightly, as you've highlighted, there are the concerns about the politics, and we've got the elections coming up. But we have seen India being one of the weakest markets this year. So I do think a lot of that is in the price. And when we look at the underlying growth rates in India, they still remain, as you pointed out earlier on, pretty robust. And in my opinion, the big reforms that India requires, whether that's the move to digitalization, whether that's the recapitalization of the state banks and the like, and the tax reform, have largely been done. And as a result, India should be able to sustain stronger growth for longer. And I think that makes India one of the more interesting markets when we look out over the next 5 years.
Well, there you have it. All right, but as of now, let's look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
The 2020 election battle lines, meanwhile, are being laid out with a new row between President Trump and his political opponents. The latest spat comes after the Democrats decided not to use Fox News as a media partner in the campaign, triggering a Twitter response from the White House. The president said he may impose a ban on using what he called the fake news networks and the radical left Democrats. Huawei CFO Meng Wanzhou has appeared in court to begin her legal battle against extradition to the United States, with May 8th the date for a first full hearing. Meng has been under house arrest in Vancouver since being detained 3 months ago. Her case has enraged China, which has arrested 2 Canadians accused of spying. Beijing says Canada is engaged in, quote, political persecution. A leading member of the Bank of Japan Policy Board has broken ranks to sound a warning about the upcoming sales tax hike. Fusaka Harada says the economy could slide into recession when the tax is imposed, despite a range of government measures to limit its impact. Harada told business leaders that economists are underestimating the fallout from the last tax rise in 2014, which hit consumption hard. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
2018 was the worst. So we did see a fall in job opportunities from 2016 November. That's after demonetization. So 2017 was bad, but 2018 was much worse than that. So there's a steep decline in employment and in the employment ratio. So we are seeing large-scale discouraged unemployment, which means people who came to the labor market, tried to get a job, did not find one, tried for some more time, and then gave up. So when they give up, they leave the labor market. They don't even call themselves unemployed. They just say, we are not in the labor market. We're not looking for jobs anymore. There ain't any on offer anyway. And that is the most distressful part. That's what shows up in the low and falling labor participation rate. So I think the situation is pretty grim.
NSSO data, which was leaked and published in a leading financial paper, which suggested that the country's unemployment rate stood at a 45-year high at 6.1% in 17-18. After that, the government dismissed the authenticity of that data, said it was an interim report, etc., etc. What do you make of all of the controversy and all of the debate really about the authenticity of data out there, and specifically about the NSSO report?
So I think it's very unfortunate that the government did not release, or it stopped the release of that data. I think that data is very valuable. It is very important that the report does get released. All that we can see from here is that the stopping of that report by the government indicates that there is a lot of stress in the labor markets, to an extent that the government felt compelled to withhold that data. Although the data was signed off by the National Statistical Commission, the government thought it is too troublesome. It's against the narrative that the government believes in, and therefore they withheld it. Now, mind you, that report said that the unemployment rate is 6.1%. At that time, for that same period, our comparable numbers around 5.8%. And that 5.8% has today gone up to 7.2%. So the situation is getting from bad to worse, and the government is saying we don't believe it. If the government says we don't believe it, if they don't believe CMIE's numbers, which is a private organization, I can say, okay, that's understandable. But their own report through an agency which is under them and has for decades produced such numbers, then I think we are only running away from the facts. And if we run away from the facts, we can't solve the problem.
There are several stocks that we need to look at today, starting with the updates on the offer for sale of Endurance Technologies. Yesterday, the non-retail quota was subscribed 4.61 times. The OFS for retail portion opens today. LT Foods will invest rupees 20 crores via preference shares in its subsidiary Dawat Foods. The investment will strengthen the balance sheet and improve Dawat Foods' current ratio. Now, HFCL bags orders worth rupees 117 crores to supply optical fiber cables to Tata project under Bharat Net Phase 2 project. The order will be executed over a period of 24 months. Biocon said it has received 6 observations under Form 483 for the Bangalore facility from US FDA. The pre-approval inspection by US FDA was triggered by a new drug application submitted by the company. The inspection at the Bangalore facility took place between 25th Feb and 5th March, and the company is confident of addressing these observations expeditiously. Agent Granito raised rupees 90 crores by issuing convertible warrants to promoter and non-promoter group entities. Odisha Cement clarifies on various media reports that it never authorized Allied Financial Services to transfer, use or pledge the mutual fund units. It also said that the amount received by Jayesh Doshi in his account is legal and valid. Jayesh Doshi is currently a director at Odisha Cement and Cointrap Technologies. Lastly, let's look at the key bulk deal. DSP Mutual Fund sold 21.7 lakh shares, that is close to 3% stake in Everready Industries at rupees 200 each. The buyers include India Opportunities Growth Fund, OHM Enterprises and OHM Juniper Fund.
And you'll find plenty more on the website bloombergquint.com, just like that. In fact, you'll find all the live market action as well, and you'll find several stories that I think you'll find are very interesting to read. Let me take you through a few of them. Ratings agency S&P Global Ratings has said that Bharti Airtel's proposed rights issue of up to 25,000 crore rupees is not going to be enough to stabilize its credit rating. There's a negative outlook, which is an indication of rating downgrade. This takes into account renewed competition and higher capital spending by the company that will keep its debt level high, according to the rating agency. In other news, India is exploring various options, including approaching the World Trade Organization to counter the US's decision to withdraw import incentives for about 2,000 domestic goods under the trade preference scheme. That's according to a PTI report. And the Central Bureau of Investigation has sought more documents from ICICI Bank relating to loans worth 1,875 crore rupees given to Videocon Group during the tenure of the bank's former chief executive Chanda Kochar. Officials told PTI this yesterday. That's all you need to know going into trade today. Up next is a lot more before market starts, so do stay tuned. This is Bloomberg Quint.